Welcome to Power Charting. I am your host, Bruce Fraser. We are going to continue with our Wyckoff tape reading workshop series, part 3, Introduction to Distribution. Very excited about our case study that we're going to do here together. But I want to start with some very cool new features that are at StockCharts.com that I find particularly valuable. And I'm very excited about them. I think that Chip and his team have done a magnificent job of creating some great new features, very valuable. And I just want to show one of them to you today. First, trading through the business cycle, the inflation era, the great Joe Turner, 50-year veteran of financial markets and a business cycle expert, is going to join me for a discussion on what he believes is going to be a series of business cycles where inflation could be different than it has been in the last, say, decade. And the impacts of those inflation forces on financial markets. Incredibly important and valuable, and very, very much looking forward to this workshop. The first one will already have been in the can when you see this, but Feb 8 and 15 are still going to be available to you live to watch, and you can watch the first one on a recorded basis and be just all caught up when the second one begins. Hope to see you there. So to start, let's get right over to these great new tools. And you can see here, there's a new Sharp Charts workbench. There's also what I think is a fantastic feature, the update of the market carpets, very valuable. But what I want to show you today is the index members page. This is new. I think it's exceptionally exciting. And when you click into this page, which you go to from Charts and Tools, you have the ability to be able to look at lists of a number of different important indexes. Here it goes to the S&P 500, but you have the 100, the 400, the 500, the 600, NASDAQ 100, the Dow, industrials, transports, utilities, and the all-important sectors of the market. Now, what's beautiful about this is it's such a labor-saving device to be able to use this, because you see this list is in alphabetical order by name. This is all 500 of the S&P 500 stocks. What I like to do, and you're going to find many, many ways to be able to use this wonderful tool, but you can see, just to orient you, you have the list of these stocks by sector, by industry group, by current price, market cap, scooter, whether it's a large cap or medium or small, and then where it is in relationship to its 20-day EMA, 50-day SMA, 200-day SMA, all very valuable pieces of information. Also, you have readings for RSI, ATR, ADX, and you can see the dividends. And all you have to do to be able to sort any of these categories is to click on them, high to low or low to high. Look at yield. You can click on yield here, and you're now seeing the S&P 500 highest yielders down. So for some, that's very valuable information. And what I like to do, because I'm very much of a trend person, is I start with the very valuable scooter ranks and highest momentum scooters to lowest, all 500 of them in order. But now, what is it? So you can see them just all by order of scooter, but I organize them by sector or industry group. So if we sort, and let's just do this, and you can go further into this as you go. The highest scooter right now is NVIDIA, as you can imagine. But if we do sector and click on that, now we have all the sectors in alphabetical order ranked by scooter. And you can see in communication services in the S&P 500 that Warner Brothers is the lowest communication service sector stock with a scooter of 5.9. Very cool. Look at the color ranking feature that they've just added for the scooters. So incredibly valuable. Now, I am a trend person long term. I look for stocks based on my trend model, which I've talked about in power charting a number of times and at ChartCon. And I look for stocks that are in rising trends above their rising 39-week moving average on price and relative strength. So when I see both those conditions emerging, as was the case here back in May of 23 for Google, this stock is on a buy. And note, it's just coming out of an accumulation structure from a Wyckoffian perspective. And note this beautiful distribution structure right here. So, and when it's in a downtrend, I avoid them. Some people might want to look for short ideas. Strictly a personal preference item. I'm looking for stocks that could get into uptrends and stay in them for a very long time. And you see that here with Google in 2019 onward for price and relative strength. But you can go through and look at all these sectors. And I've been looking a lot at the staples lately, consumer staples. Well, here they are, highest scooter to lowest. And I'm very curious about what's emerging into a new uptrend, just coming out of a trading range or a prior downtrend. Let's look at Target. Wow, look at this. Target is now above its 39, which is still declining, and relative strength is attempting to get above its declining 39. May take a few weeks or a month or two to get the moving averages pointed up. But after a long decline, it could be that Target is into its value zone. So right around that 60 level for the scooters at this time is we're seeing the emergence potentially of uptrends. So I love to look at those and look how quickly we were able to get at that. Sometimes when a market is very, very strong, has got really good momentum characteristics, you'll have scooters that are down in the 30s that are in confirmed uptrends. Other times when the markets are very, very narrow, performing poorly, it might take a 75 or an 80 scooter to find a confirmed uptrend. But see, that's all very useful information. And now you can organize it by sector, or you can organize it by industry group. You can organize it by scooter. So the key is at the top, select scooter first, and then select sector or industry. And you can even do both, go scooter, sector, industry, and then you have them in order of that. But I find that it's suitable for me just to look at the sectors and go in that way. Also, you can go in and look at any one of these sectors and see all the stocks, including the ones that are not in the S&P 500, such as we're looking at the industrial list here, and it's cooking on that. And you can see that we can now look at all of the industrial stocks, rank them by scooter. There you go. 99.6 is the highest. And then what I do is I rank by industry group. Now we have all the aerospace in the whole sector from highest scooter to the lowest. And that's incredibly valuable information. Look how quickly we were able to generate that and move on. So very powerful, efficient tool that has been added here. I wanted you to know about it because I think that it's going to really help you to better understand the how and where the markets are performing best. I love to look at the S&P 500 because all of the really large cap managers pay close attention to the S&P 500 stocks and are competing with that index. And so to know sort of the lay of the land of the S&P 500 from a tool like this can be immensely valuable in giving you a 3D sense or perspective about where the market is. Okay, moving on. Here's the Pruden model. Let's just get everything in here. We're going to look at distribution, which is up here, and look at the volume characteristics in distribution. And we are going to basically explore one very interesting stock at this time. Go to the September of 2015 distribution definition blog that I did, and you can read more about it, including getting these schematics. I think the schematic that most appropriate for today is this one on the left, schematic number 2. And but you'll see this one very often with the upthrusting action. So otherwise they're very similar. Wyckoff rules, we've talked about these in the past. If you don't have them, screen capture them, memorize them. Everything we talk about has these characteristics of price and volume attached to them. So here is our first look, long-term weekly chart, UPS. Here's my trend model. Note that if we go back and look right here in 2020, we can see that there's an upward stride in UPS in both price and relative strength. And this is for more than a year, is a very viable uptrend. This is what institutions seek out. They want absolute return from price, meaning in an uptrend, and they want relative outperformance against their benchmarks, which I always default to the S&P 500, which most do, but you may prefer a different benchmark, which you can put this into your model very easily. Now, we're looking at the distribution structure. You can see a climax here, attempt to upthrust this on a secondary test, a last point of supply over here, a sign of weakness here, and then a very poor rally attempt, which results in a downward stride. And you can see the relative strength turn down in 23. And it's been a terrible underperformer in 2023. Now, we can count the point and figure structure, 3-box reversal method. And you can see that we take smaller counts with distribution. Let's count this area right here, and it counts down to 124, and we have not quite achieved that yet, but here's a redistribution count, and this count takes us across to the breakdown area, and it counts to 134 to 122, 2-box reversal or 3-box reversal, longer term point and figure chart with a 2-point scaling. Okay, so now we have the lay of the land on the weekly environment and the trend characteristics. Here's one more look at the big picture. You can see the distribution structure. In this distribution structure, it's very well defined, even in the point and figure structure. And here's redistribution, which is substantial. And we are going to look at those on a shorter term swing trade basis. But here is a reaccumulation count here. Look at this, 192.207. It climbs above this, 3 boxes above the 207 high on a blow off after a buying climax, upthrusting action, secondary test, and then a failure into a sign of weakness, classic Wyckoffian distribution, and then up into a last point of supply or a larger redistribution possibly. And then here is a small one that confirms. They both go to 207. And now here's a distribution count. We tend to take smaller distribution counts because we are looking for those pauses along the way, and also very large counts can give us objectives that are, not really relevant. Now, here is a daily chart, a vertical chart with volume where we do our actual tape reading. And so let's do some quick tape reading action here. And so you can see we draw up here on this high point. That is a buying climax. We draw immediately a resistance line across the high print on that climactic bar. And look, up thrust, secondary test, last point of supply, and then a downward stride. So, and this is a big sign of weakness. So there's a point and figure count, which we just showed you one. We're going to do one on a one box reversal basis here in a minute, but just so you're aware of that. And now let's go into the volume characteristics. Here's the downtrend that followed our last point of supply. And now just some very interesting, every bar is interesting from a price and volume basis. I'm going to show you some of the important bars, I think, in the structure. You see here very high volume on this upward stride out of a range-bound condition here. That bar is a bullish bar. Then you have a pause, attempt to pull back, and then it closes near the high of the prior session. And then another big push up on high volume above the moving average on the volume characteristic. And that is what sets up the buying climax. Then thereafter, it has a pullback, but note, the pullback comes on low volume, as shown by that downward sloping arrow. That is bullish because that shows that there's not active selling off that peak. And so we would expect another attempt to rally. And in fact, we get a good attempt to rally here where volume expands and is generally above the volume of the decline. This is not a particularly dynamic advance, does not go to a new high, lots of overlap in the bars, but it's an upward stride. And so we give it the benefit of the doubt. Volume comes in on this low day here. And as it touches the 50-day moving average, and then the volume is quite high on this day. A bullish day goes down, closes in the top 2/3 of the range, and stays above the 50-day, and then has follow through on volume here. So it continues to go up. We expect supply to show up at the resistance line, and we would see that in volume characteristics. So here you see volume generally comes in, it's not huge, and so we are expecting that there isn't supply coming in and selling off the market here at this level. And then we push up again. This rally is a bit better. It goes up faster, it has some ease of movement. The volume is not great right there, that volume. And so that's a warning. Then when it does sell off this resistance area, volume's expanding. It's higher than it was on the rally phase. So it's just a tiny clue. And then as it goes up here to new highs, the volume is generally not expanding until the highs. So right here you see it, and let me make sure I get that lined up here. So that shows us that volume is coming in, but it's not lifting prices away from the resistance area. And so that is a warning to us that we have effort without upward result. And in fact, right here, a big decline may have been earnings, and that is on volume, and that takes out the support area immediately preceding. It sets up another accumulation swing structure. This, you can check out the volume, but this volume is generally pretty good on the way up and diminishes some at the end with a lot of volume coming in right at the highs, right in here. And so you can see that, and that is a warning to us that supply is present at the resistance area. And this is what we get. Ease of movement, big swings, big bars on the way down, and it goes down. We took account here. Let's see what happens. Let me show you the rest of these important bars on the way down. Supply is present. Volume dries up on the attempt to advance and then comes in again with a selling climax, very wide-ranging bar, high volume into the lows with a throw under of the channel. That's a classic oversold condition. Rallies, tests. The test comes on lesser volume and we get a more important rally, which is constructive. And this very bad earnings report that we got just a few days ago declined, but to a higher low. That could be, in fact, it's too early to tell, but we may be seeing an attempt to build a cause, potentially to go up. It's just too early to tell at this point. And the relative strength has been warning us all the way since this area back here that the institutions are raising cash away from UPS. And they don't want to own a stock that's underperforming. We have a distribution area here. It's a local swing distribution area, so let's take a look at that. And you see here, this is a small swing count, which look at how beautifully it takes us right into this zone here. Look at the really good volume on this rally attempt off the low, the test of the lows. We can see that often quite well in point and figure, and it gives us a little bit of a rally up. And then here is a bigger count. This count takes us down to this 144 area, 146. And this count takes us to 138. And so we have an objective range. And look, we just threw under this 138 area by 3 boxes, 2 boxes really, and then reversed hard. So that's very, very constructive. Redistribution count confirms this higher distribution count. That gives us further confirmation of where this market wants to go. And then finally, we have this small distribution area here. And look, we went right to it. So we may be doing a lot more work in this zone right here. Now, many of you might be asking, what about the larger distribution? This distribution takes us down below $100, and I leave it to you. It's 56 times 1 box reversal times 2-point scaling, and you take it from the high and from the count line, which is 184. Take that count, and it'll tell you what this big distribution area is. But we have to take these distribution areas with a grain of salt because they often are just so big that they just aren't going to be relevant. But it's too early to tell at this point. We should get redistributions along the way that ultimately will confirm to those lower numbers if in fact this stock wants to keep going down. And I'm not saying it won't. I'm just saying we have to take this in bite-sized pieces. So with that, this is my very brief distribution, kind of a integration study of how you can use point and figure and vertical charts and look at the volume characteristics. Look for volume off the resistance areas and the peaks, and for that volume to come to be high and the spreads to be wide on the declines off of resistance. That's always a really big clue that there is supply present. You can even see these characteristics show up in the point and figure volume. And with that, I'll thank you so much for being here, and we will see you next time on Power Charting. Take care, everyone.